Happy Friday, traders. Okay, so towards the end of the week, we got some important economic data. First up, we got some important economic data from here in Australia, some inflation data. Now that data, the headline number was supposed to go from 4.2% to 4.4. It actually came below expectations at 4%, so that was a big positive. But on the RBA true mean, which is the core number, that actually rose from 3.4 up to 3.5%. So a little bit of a mixed bag on Aussie inflation, but the key takeaway was the way the market's looking at it is that the fact that crude oil prices now are crashing a long way from their highs and down around $70, that is going to obviously ease the inflationary pressure. So market is not looking for the RBA to hike anytime soon. So the RBA, after doing 3 rate hikes already this year, market's looking for them to remain on hold. So that's some good news for the local market. But yes, when we got those CPI numbers, it wasn't helpful or didn't give the Aussie dollar any strength. Now we did also get some US inflation data overnight. That is the PCE. Inflation data for May. Now, this is the Fed's preferred inflation gauge. So obviously, the market was very focused on this last night. The headline number there, market was looking for that to go from 3.8% to 4.1%, so to go up. And that did come out as expected at 4.1%. The core number, the market was looking for that to go from 3.3 to 3.4. And yes, it did also marginally go up as to expectations. But look, just like the Australian inflation data, with headline coming off and market looking at potentially lower inflation numbers in months ahead because of the sharp drop in crude, that same narrative played out with the US inflation data. So the market was not spooked that inflation did marginally go up, and it did not really weigh on the market. So if we look at US bond yields, they didn't spike up on that US inflation data, and actually we saw yields a touch lower. So US 2-year yields settled last night around about 4.12%. So that's a good 10 basis points lower from the highs that we saw so far this week, which was around about 4.22. And US 10-year yields settled around about 4.39, around about 4.4%. And yes, they're also about 10 basis points as well lower from their highs this week at 4.5%. So those yields, yes, are going away from sort of the dangerous levels, but they are still well elevated, especially when you look at the Fed funds rate is still at like around 3.5%. So if we look at the currency markets, look, the US dollar is still on fire. Your dollar index is around about that 101.5 level, so that's at 52 one-year highs, and really that's been one of the main trending markets that we have seen in the past week. This really strong US dollar. Dollar yen is trading at the moment around 161.80, so that is still sitting right at 40-year highs. We've had a lot of verbal intervention from the Japanese, and I'd suggest at some stage they will intervene physically into the market selling dollar yen. But I think maybe they're waiting for dollar yen maybe to break 162, make some new highs, and get rid of some shorts that no doubt will be getting stopped out above 162. So that is something that potentially early next week, maybe Monday, let's see. But I would not be long dollar yen above 162. If you have a look at the commodity space, especially gold, just like the US dollar, we've seen some big moves there, and obviously moves lower for gold. We talked about gold targeting the 4,000 level. That would be a magnet, and obviously decent support for gold. Broke that yesterday, went down towards 39.50. Before we saw a little bit of a bounce for gold back above 4,000, where we are now in the low 4,000s. But certainly, look, the sellers, 100%, they are there. They are waiting topside. It's going to be very, very tough for gold to have any sort of meaningful rally when we've got this US dollar at the moment on fire. And as I said, yields are still, even though we've seen them a touch lower in the last few days, they are still at very elevated levels. So yes, it would not be a surprise, if we see fresh waves of selling in gold, and obviously the key support now is the overnight low at 39.50. Obviously, around if that level breaks, we could see another sharp move lower. But no doubt, sellers are waiting, 4,100 plus. So I imagine that's probably going to cap topside. Lastly, the other big story in markets at the moment is Bitcoin. Bitcoin has been the weak link in markets for quite some time. We have broken 60,000 last night. We even went down to almost 58,000 before we saw a bit of a bounce back up towards 60,000 where we are now. The big story in markets with Bitcoin is Michael Saylor and his company Strategy. Michael Saylor and Strategy are the biggest Bitcoin holders in the world. His company Strategy now is down about 94% from its record high. There is a lot of blood happening now with Strategy. A lot of the sharks are circling, and they are potentially waiting for Michael Saylor to capitulate and have to sell his Bitcoin. He has about 30,000 of them. If he has to sell Bitcoin, we could see a massive move lower in Bitcoin. That is the big risk. Obviously, Bitcoin trades on weekends. Weekends are illiquid. So I would be very careful trading Bitcoin this weekend. And certainly, I think it is too early to be looking at buying dips because obviously the whole issue with Michael Saylor and Strategy hasn't played out yet. And no doubt, if he starts selling, 100% Bitcoin is going lower in a big way. So yes, bias is selling any sort of strength or any sort of rallies and staying short Bitcoin. And obviously what happens to Bitcoin's not good for the whole crypto space. So anyway, look, there's nothing on the agenda data-wise or event risk-wise to end the week. So market's probably going to continue to trade the themes that we just talked about going into the weekend. And US equity markets, look, they've been a little bit volatile with a bias at the moment, for risk-off trading with the stronger US dollar and obviously what's happening with Bitcoin as well. So anyway, good luck with your trades, and we will check back in with you next week.